Over the last few weeks, we've seen billions of dollars leaving one asset and flooding over into another. Now, it's signaling a big shift in investor perception and interest. And in this video, I'm going to explain the shifting of the assets. I'm going to explain the reasoning behind it and how you should be thinking about your own allocations. Now, this is what the biggest and smartest investors are doing right now, and you need to know this, so stay tuned. Hey, welcome back. If you're new to the channel, my name is Mark Moss, and everything is changing really, really fast, and we need to have the right information to make the right decisions, to protect ourselves, protect our families, to survive and to thrive through this period of chaos. Now, if you agree and you want to hear more about those topics, please click that like button right now so more people hear about this, and of course, hit the subscribe button and the bell notification so you're notified every time I put new videos out. Now, today, we are talking about one of the biggest shifts to investing in probably thousands of years. And for some of you, it may seem subtle. Maybe it seems really subtle right now. But if you don't pay attention now, you're going to miss the boat. Now, as an investor, we want to have asymmetric upside. What that means is that we have more upside potential than we have downside. So we have more reward than we have risk, right? That's what we want. But the only way to get that asymmetric upside is with asymmetric information. You need to have information that most people don't have or most people are missing, and that's exactly what we're talking about today. Now, it's no surprise, we're printing, the US government and all the other governments are printing trillions and trillions and trillions of dollars, 5, 6, 7 trillion dollars with 10, 20, 30 trillion more coming. All right. So as they continue to print that money supply, as the money supply continues to go up, we need another store of value, somewhere to store our wealth, because as they print more money, it makes all the dollars, the existing dollars, worth less and less and less. So as they inflate it away, they're literally stealing the value from your currency. So we need another store of value where we can store our value, where it cannot be debased. Now, gold has been that store of value. Gold has been money for 5,000 years. Other ways we can store our value, of course, is in other assets, obviously stocks, real estate, things like that also can keep up with that inflation, protect against inflation. But one of the biggest or best forms of store of value, at least for the last decade, has been Bitcoin. Now, of course, a lot of people want to debate whether Bitcoin is a good store of value. The one thing that I'll say without diving too deep into that is that it has continued to become a better and better store of value. Now, it has been the best performing asset for 11 years, 10 years, 9, 8, 7, basically every year for the last 11 years, including this year as well. And the debate between gold and Bitcoin continues to rage on. Now, on my channel, I talk about both. I talk a lot about Bitcoin and I talk a lot about gold. And it seems like no matter if I make a Bitcoin video, I get all the gold people saying, I would never buy Bitcoin. And if I make a gold video, all the Bitcoin people say, I'd never buy gold. And so we have this raging debate that goes on. The one thing that I want to say before I dig into this debate and explain what's happening in the Wall Street institutional investor crowd, give you that info that you need, is I want you to know that gold and Bitcoin are both fighting the same fight. All right? They're both protecting you from the same threat. And the threat of your money losing value, the threat of the debasement, the threat of your purchasing power going down. And we can use gold and Bitcoin for the same thing. And they're both fighting back. They're both weapons to fight back against a monetary system that continues to steal your wealth through inflation. So we are fighting the same fight. Let's say that we're going to battle and we have a choice of weapons. I don't know what weapons we have, but we can choose which weapon do we want to go fight the battle, but we're both going to fight the same battle. Does that make sense? But really what it comes down to is which one is better? Is gold better or is Bitcoin better? And what is the consensus among the best investors in the world? So the first thing we have to identify is what is better, right? What is better? What's better for you? What's better for me? What is our purpose? What is our intent? And so there's lots of things. So gold might be better if what you're really looking for is pure safety. I mean, gold has been there for 5,000 years, and it has that Lindy effect. The longer something is around, the more chance it has of surviving. So 5,000 years of history, it's great with gold. And so if better for me is I don't ever want to lose any money, I want to make sure that it's held there, then gold might be better. If you want to hold your value and you're willing to have a little bit more risk, sometimes it's only been around 11 years, but it has more upside, well, maybe that's better for you. All right. So there's better things. Now, gold is big and heavy. I can't really just grab all my gold and leave the country with it. But Bitcoin, I can just memorize 12 words in my head and I can go anywhere in the world I want. So maybe that's better. Maybe I want better because it's easy to transport. So there's lots of features. I'm not going to go into the pros and cons of each one. If you want me to do a separate video on the pros and cons, hit that like button and leave me a comment and let me know. And I could do a pros and cons video of each. But just know that we're fighting the same thing, and best really comes down to what you're trying to optimize for. But the point that I want to make is it doesn't really matter. All right. The goal is not to pick the one single best asset, the one investment that you're going to be in for the rest of your life. That's not the goal. No investors do that. Even investors like Warren Buffett who say, that you shouldn't diversify. You should really put all your money in one basket. Even him, he doesn't do that. You don't have just one investment pick in your whole life. And so professional investors, they do allocations. They hold multiple assets and they allocate different percentages, different amounts of their capital, of their wealth into different assets. And so you don't need to choose gold or Bitcoin. Why not both? Now, let me give you some more information that will help you. Like I said, I don't want to go into the pros and cons, but from a high level, the way that I look at it is, like I already said, gold is insurance, right? It's been there for 5,000 years. The chance of it going to zero is pretty much zero. The chance of it going to zero is very, very, very low. So it's insurance. We know it's going to be there. We know it's tangible. No matter what happens in the world, EMP tax, electricity, whatever, gold is going to be there, okay? So it's insurance. And maybe it'll have some growth, but really the growth comes from dollars going down in value. So maybe gold goes up to $2,400 in the next year. Maybe it doubles to $4,000 in the next 5 years, something like that. But as it goes up in US dollar terms, that just means that US dollars are going down. So they're buying less and less. So you're really not gaining any more purchasing power, okay? So gold is more insurance with a little bit of growth. Bitcoin is probably optimized for more growth and some insurance. So Bitcoin has been the best performing asset. Gold's been up, 20% this year. Bitcoin's up 160% this year. It's a big difference. Bitcoin could easily 3, 4, 5x from here. Gold might double from here. So Bitcoin has more growth potential. It has good insurance potential, but not as much. It doesn't have 5,000 years of history like gold. However, like I said, Bitcoin has been the best performing asset, so they're a little bit different. Now, the one thing with Bitcoin is that it's volatile. Right? And that's why people say it's not a good store of value. One day it's here, one day it's here. And so because of that volatility, it's kept a lot of people on the sidelines. A lot of institutional investors have been kept on the sidelines from that. However, it's all starting to change. And this is what we're going to dig into right now. It's all starting to change. The institutional investors are starting to pay attention. And when they pay attention, they can really move the markets. We're talking about hundreds of billions, if not trillions of dollars. And when an investor just starts to change their allocations, so they have the same amount of money, but they shift a little bit from one asset to another. And that's exactly what we're starting to see. We're starting to see a shift out of gold and a shift into Bitcoin. Now, as you can see from the chart that I have up on the screen right now, we can see this illustrated from this chart where it's actually taking value out of gold and shifting it into Bitcoin. We can see that at the same time gold is being liquidated, people are selling gold, we can see that Bitcoin is receiving some of that inflow and Bitcoin is reaching new all-time highs. Now, a former commodities hedge fund manager turned crypto investor, Jean-Marc Bonafres, he said that, quote, gold was really the safe asset of the past world and for baby boomers. But now it's being replaced by automated assets like Bitcoin. And that's exactly what we saw on that chart. We can see gold selling off. We can see money going into Bitcoin. Now, of course, Bitcoin and gold appeal to different generations, like the point that he made. Baby boomers and older people tend to like gold. That's the world they grew up in. They want something that they can actually hold in their hand. I see the comments on these videos all the time, and I'm sure your people are probably typing it right now. If I can't hold it in my hand, I don't trust it. And that's fine. And I get it. A lot of people live that way. But then you have the millennials who grew up in a digital world. They don't see that. They understand that there are real digital assets. And so really it's a difference of perspective. The older boomer generations wants that. The younger generations are okay with digital. And that is what's coming into the space and really fast. But it's not just the young people. All right. This is the big point. Now, I've reported previously in some other videos that some of the biggest investors in the world are converting and they're coming into Bitcoin and in droves. So some of the big notable ones I've mentioned before are Paul Tudor Jones, one of the biggest hedge fund investors in the world, Stanley Druckenmiller, who's probably the most successful, the biggest name in investing, maybe not as well known as Warren Buffett, but man, Stanley Druckenmiller, he holds some heavy weight. Kathy Woods from ARK Financial, she is she's called out some very bullish numbers for Bitcoin, which is amazing. And now we've seen Guggenheim Partners. They've recently jumped on the bandwagon, and they made really, really big news in the last week because they did a SEC filing, Securities Exchange Commission filing, stating, quote, the Guggenheim Macro Opportunities Fund may seek investment exposure to Bitcoin, investing up to 10% of its net asset value. Wow. So we're talking about a massive fund. We're talking about a huge, huge fund, hundreds of billions of dollars, and they want to invest up to 10% of its net asset value. Now, I talk to people and I say, hey, you should put at least 1%, like 2%. Like that's what Paul Tudor Jones did, a couple percent. If you lose 1 or 2%, it's not that big of a deal. But if 1 or 2% do what we think Bitcoin could do, that could be a really big deal. But here's Guggenheim saying that they want to invest up to 10%. Now, to put a number behind that, that equals about $5.3 billion they want to put into Bitcoin. Now, one other important note that was on their SEC filing noted that other than investing in Bitcoin, they will not directly or indirectly invest into cryptocurrencies. So it's only going to be Bitcoin, not, I won't say that altcoins. Let's just say altcoins, right? You probably know what I was going to say. But again, what's an interesting twist is that we're seeing funds like Guggenheim, like even smaller family offices, and they're selling their gold ETFs holdings for Bitcoin. Now, I don't think anybody's going to get their physical gold, ship it back, and sell it to buy Bitcoin. But a lot of these big funds, they buy paper gold. Those are the exchange-traded funds, the ETFs. And so that's what we're able to see. That's what we're able to track, and we can see them liquidating. Now, according to analysts at JP Morgan Chase, they said that their bullion-backed funds, their gold funds, had dropped 93 tons of metal. They dropped 93 tons of metal worth about $5 billion just since November 6th. At the time of this recording, it's about 30 days. Now, at the same time period, we've seen Grayscale Bitcoin Trust, which is the preferred vehicle for institutional investors to enter Bitcoin. At the same time, that Bitcoin Trust has more than doubled at the same time. Now, currently, Bitcoin's market capitalization is only about $350 billion. Now, I know that number may sound big, but it's actually really small, $350 billion compared to gold, which is approximately $10 trillion. So basically, Bitcoin is about 3.5% the size of gold. Now, if all it did was increase a little bit, let's say it increased from 3.5% of gold to say 5% of gold, it would push the price of one Bitcoin to over $31,000 compared to today we're somewhere in the 19,000 range. It's a pretty big jump. Now, of course, Bitcoin is establishing itself as a credible store of value. Like I said, it's critics have often said it's not a good store of value, but it is becoming that good store of value. Now, probably one of the most outspoken critics in the world on Bitcoin, he gets a very big mic and a very big stage, and I'm not sure why, but he's been very outspoken. I'm talking about New York University economist Nouriel Roubini. Now, he said back in February of 2018, after the Bitcoin crash happened, he said that Bitcoin had been, quote, the biggest bubble in human history. And then he went on to claim that its price would now, quote, crash to zero. Now, he didn't stop there. Like I said, he's been an outspoken critic. He continued to bash Bitcoin. He even spoke to U.S. Congress, telling them that Bitcoin was, quote, the mother of all scams. So he hates it, right? He's been outspoken. But suddenly, Roubini, who's, like I said, been one of the most outspoken and harshest critics ever, appears to be changing his tune. Now, in a recent interview with Yahoo Finance, he said, quote, it may be a partial store of value because it cannot be so easily debased, because there's at least an algorithm that decides how much the supply of Bitcoin raises over time. Wow. Now, for you, if you don't know Roubini, that may not be that big, but if you understand who he is and what he's been talking about, for him to admit that, that's really, really big. Of course, I mentioned before Ray Dalio, one of the biggest, most successful hedge fund billionaires in the world. He's been a very outspoken critic of Bitcoin as well. And he finally said, quote, I might be missing something about Bitcoin. Now, we've seen lots of other people come in and talk about these things. James Butterfield, investment strategist at CoinShares, said, quote, "This is particularly appealing during this time of unprecedented loose monetary policy. And for these reasons, investors are naturally comparing it to gold." So what he's talking about is loose monetary policy. We're talking about trillions and trillions of dollars. I talked about in the last video how the Fed and Treasury are going to probably merge, and we're going to see MMT, modern monetary theory, and trillions of dollars be printed. And so in times like that, people would typically rush to gold. But as James Butterfield said right here, people are also looking to Bitcoin. Now, one of the biggest conversions in the institutional Wall Street space came from one of the largest asset managers in the world. I think actually the largest asset manager in the entire world. If you might have a guess, let me know. But yes, it is BlackRock. Now, BlackRock is the largest asset manager in the world. They are pretty much intertwined with the government and the Fed. I've talked about them in other videos. I mean, they have gotten a lot of the stimulus money to invest. Some questionable things there, to say the least. But the point that I'm making is they are very connected. They are like basically one with the Fed, helping them push their policy. And so to hear something coming out from them, or actually their chief investment officer for fixed income, Rick Ryder, he told CNBC that, quote, "Bitcoin is here to stay." So to hear somebody as connected as that, I know I'm going to see it in my comments that, oh, the government's going to make it illegal. But here we have BlackRock, kind of the retail arm of the Fed, coming out and saying Bitcoin is here to stay. So I don't know what else you need to hear. I mean, you're almost hearing it directly from the horse's mouth, so to speak, right? Now, he didn't just stop there. He went on to say that it's backed by demand among millennials and its strength as a medium of exchange. He said, quote, "Bitcoin is so much more functional than passing a bar of gold around." So what he's saying there is it's backed by demand by millennials, like I said, the younger generation, and its strength as a medium of exchange. Now, a lot of people say Bitcoin's too slow, it can't scale. Well, he's saying it's a medium of exchange. Now, I don't know who you are, but I listen to somebody like that, right? And of course, I use Bitcoin, so I understand that as well. And he said, the quote, "It's much more functional than passing a bar of gold around." Of course, try to pass a bar of gold to somebody in Germany. It's not very easy. It's going to take a long time. It's going to cost a lot of money. And while Bitcoin might be a little slow, it's much faster than a wire transfer. So it's definitely much more functional than passing a bar of gold around. So which is it? Is it going to be Bitcoin or is it going to be gold? The answer for me, it's both. The answer for me is both, but it's in different quantities. One thing that's clear is Wall Street is taking Bitcoin seriously, and while Bitcoin might not replace gold, it might not replace gold, or it might not, soon, or it might not replace it ever, right? But there is room for both, especially if the future is one of inflation and extreme debt levels, which of course it is, guaranteed, right? So the question is, how much of each? And only you can answer that. And that's based off of your own conviction. Now, for me personally, I hold way more Bitcoin than gold. But for you, it might be the other way around, and that's okay, right? But I do think everyone should own at least some, even if it's only 1 or 2% of your total portfolio. And yes, you can buy $5 worth of Bitcoin, right? If that's all you want or that's all you can afford, buy $5 worth, all right? Like Bitcoin's founder, Satoshi Nakamoto, said, it might be worth getting some in case it catches on. But like I said, you don't have to just pick one. They can both be used together, complementary. And one thing is for sure, that whatever your starting position was with either before the pandemic, basically in terms of how much you were holding or what your allocation should be, today, it should be much, much bigger. All right, now let me know what you think down below. Do you hold both, or are you only in the camp of one or the other? And have your allocations changed since the pandemic? Let me know in the comments down below. Of course, as always, leave me thumbs up on this video if you like it. If you don't like the video, that's okay. Leave me thumbs down, but tell me in the comments why, so I can adjust my content and make some better for you. And that's what I got for you today. To your success, I'm out.